Welcome, everybody. As we say at ImpactAlpha, greetings, agents of impact. Our theme this week poses a simple but urgent question. Are impact investors and innovators stepping up to meet the moment? It's a question that will underlie every conversation on these stages over the next 2 days. The world is being reshaped by political, environmental, and technological disruption. And yet within that disruption is a demand for renewal. So today's discussion asks, where has there been progress in reshaping financial markets for an inclusive and sustainable future? How better can we meet the scale, the challenges, and the opportunities before us? And what still needs to change? Impact investing is expanding and maturing, but global inequality is deepening, aid is shrinking, citizens are demanding accountability, and democracy itself in various places is under strain. So are we as investors and innovators stepping up? Are we ready to lead, and how? And what does this community offer to global markets and to this moment? So we'll explore these questions with three true leaders in this field who are redefining what finance can do in this era of disruption and possibility. Ellen Brooks, the new CEO of Village Capital, which has directly supported more than 1,400 startups in more than 40 countries through more than 150 accelerators and workshops. Previously, Ellen was the Director of Innovative Finance at the IRC and has a career earlier in more traditional finance and brings that perspective to the group. Amit Bouri is the CEO and co-founder of the Global Impact Investing Network, where he leads one of the largest global communities of impact investors dedicated to increasing the scale and effectiveness of the practice. Amit's work has helped define impact investing, and today he leads the GIIN in building the tools and resources investors need to grow the industry with integrity. Amit is also one of my earliest influences in the field. And Elizabeth Boggs Davidsen, CEO of GSG Impact, formerly the Global Steering Group for Impact Investing, where she leads partner networks in more than 50 countries to grow impact investing ecosystems with local expertise in local contexts. Prior to GSG, Elizabeth was a presidential appointee and the vice president of the Office of Development Policy at the U.S. International Development Financial Corporation, known as the DFC. So welcome, guest. Appreciate it. Amit, I wanted to jump in with you. Let's start with a sort of temperature check on the state of impact investing. You released a State of the Market report. What jumped out to you? What highlights do you have from that report?
Sure, thank you, Dennis. And I just want to say thank you. Working okay? Yeah, okay, great. I just want to say thank you to SOCAP for hosting this important conversation. I came to the first SOCAP and when we were kind of forming the GIIN, so back in 2008, and it's been a very special place for me, and so I'm thrilled to be back and having this really important conversation about where does this all go. We, as Dennis mentioned, we recently published as our State of the Market report. It just came out a couple weeks ago. It's our largest kind of analysis of trends in the market. It's a survey of over 300-something impact investors from around the world. And one of the things I think is really important about in this moment is that we're all kind of track so many kind of like the news, which is kind of unrelenting in terms of the changes and adaptations that we're all seeing in the global market, and whether it's political, economic, and really looking at how we all relate to one another. So it was really great to actually get underlying data on what's happening in the market. And so I'll share a couple of the highlights, but I think one thing that's important to note is that, as a headline, is the impact investing market continues to grow. So assets under management are continuing to build. We identified a 6-year growth trend of 21%. That's a compounded annual growth rate. But the market continues to move forward. It doesn't discount the challenges people are experiencing, but underlying kind of capital and assets continue to grow. We saw the largest portion of capital raised by funds is coming from pension funds and retirement systems. So it's about 35% of capital put into impact funds. I find this particularly interesting because this represents money from workers. So people who are teachers, healthcare workers, firefighters, and kind of ordinary folks whose retirement is invested. increasing in impact, which I think is an important component of this future of finance conversation. Top sectors continue to be financial inclusion, clean energy, food and agriculture, as well as a lot of interest in healthcare. And we also see some challenges that people are encountering. At a global level, people are reckoning with, of course, inflation, climate change, geopolitical uncertainty. No surprises there. And then within our sector, people have identified issues around fragmentation, the challenges of impact measurement and management, and concerns around impact washing as some of the concerns that people are paying attention to. But as an overall headline, one of the things that I think is important to acknowledge in this moment is that while many people in our sector are kind of concerned about what's happening in the world and trying to adapt and recalibrate and figure out how we need to meet this moment, we do see underlying activity impact investing to continue to be quite strong. And I think, which is an important, thing for us to all kind of hold in mind as we think about what we need to do as leaders in this moment and how we need to kind of evolve our own work to really meet this critical moment in the world.
Amit, you mentioned the sort of increasing shift of institutional capital into the market. We discussed in Berlin this sort of remarkable data point in the survey that where investors identified their expectations for returns for impact investing, their impact investments to be higher than their investments in sort of traditional investments. What do you make of that data point and what it means for the growth of the industry?
I think it's really interesting. We've done this trend survey for years, and it's always interesting when things, many things sort of validate kind of what you know, and then you see these data points that are actually quite illuminating. So this year we had a question where we took, by asset class, and we asked investors who are, invested in a mix of impact investments and traditional investments to articulate what their returns expectations were. So think about traditional private equity next to an impact investment, private equity portfolio. And we aggregated this across many investors who responded to the survey, and it produced a result where actually people were expecting high returns from impact investments in the exact same asset class. Now, conversations have been happening at SOCAP since it started is how people put added expectations on impact investments or unrealistic expectations, perceptions of higher risk, perceptions of lower returns. And what was fascinating is that we actually saw this articulated in aggregate data that people were experiencing higher expectations for impact investments. What we also showed is that impact investments have continued to perform. And I think when we think about where this market's going, one, we're all thinking about how do we make sure people understand this market properly. Debunking myths. We're also making sure people understand the broader value that's created by impact investments, not just financial, but also the impact and what that means for the future of the world. But it's also important that we increasingly have more data to counter some of these myths and misperceptions of the market, and increasingly a track record of good performance, which I think has been what's leading to more institutional investors who tend to be very constrained by regulations and things, being able to allocate capital towards those more mature impact investments. But I think it kind of, that one data point kind of spoke to what I think a lot of people in here experience as, just how people are pressed for returns in ways that are not applied to traditional investments.
And then, we're talking about the future of global finance, but when you look around and talk to impact investors in your network, how do you see the practice and the growth of the industry already reshaping markets? What do you think has been the impact? Well, there's sort of the broader societal impact, but in terms of financial markets themselves, what do you think the impact of the growth of this industry has been?
So one of the things that, going back to this kind of the history of kind of SOCAP, when the first SOCAP convened, we weren't using the term impact investing broadly. And that was a choice that some folks made, and it was a new language. But the term impact investing was chosen for one reason that's obvious, but another that's less well known. One is that it's about getting more investment into high impact projects and companies. That's what we typically talk about with impact investing. But the other reason why people like that term originally was that it's also at how do you have an impact on investing itself. And when we did our roadmap for the future of impact investing a few years back, we set out this ambition that it's not just about growing this wonderful niche that we're all part of in this community, but we actually, if you're going to address big systemic problems, the kinds that you mentioned in your opening, climate change, nature loss, systemic and intractable inequality, we can't just have a great impact investing community. We actually have to change the way the broader financial system operates. We have to bring more people to put capital towards impact. So what I think is really important about this moment of work that everyone here has already been doing is that we have been building the track record of making the case. And now we've seen, from the GIIN's vantage point, a lot of large institutions who are, again, take the example of pension funds, looking after the money of workers, people's futures, people who work their whole lives for decades and actually want to just have some comfort to retire in. They're increasingly allocating capital towards impact. We've had an initiative at the GIIN working on engaging institutional asset owners for about 5 years. And we're now starting to see a lot of traction. And so, just a couple of data points. We have Europe's 2 largest pension funds are very active members of our network. The world's largest pension fund, just a couple weeks ago, the Government Pension Investment Fund of Japan, just announced that it was actually exploring impact investing for the first time. Which is a huge signal. So they're going to do an assessment and then figure out how this fits in their portfolio. But this is amidst everything else going on in the world right now. We're now seeing some of the largest investors globally either active in the market or indicating that they're kind of moving and assessing this. And since GPIF made that announcement, 4 other Japanese pensions have also announced that they're going to be developing their own strategies. So we do have these mixed signals in this moment, and I think it's hard for us all to hold this. A lot of things that worry us, but also a lot of momentum that we also need to tap into and help shape, so we do realize the future that we all seek.
I think it's a really interesting point about long-term investors that have, pensioners to look out for. Impact investing seems to be giving them a place to park that money that's both impactful for those communities and those individuals, but also has that long-term sort of financial outlook too. Yeah. Okay, Elizabeth, I wanted to dig in on the sort of, I think what's on part of what is on top of people's minds, which is the decimation of global aid, primarily from the U.S. side, but also in Europe. You used to work in this space very directly, and now I think are in the position to sort of see the impacts globally at GSG. Can you talk us through a bit of what you're seeing in the pullback there? Like what's been the impact on the communities, and how are impact investors that you see responding?
Sure. And it's a pleasure to be here. And it's a pleasure to be after Amit, because I concur with so much of what you said, sort of the observations around the marketplace. But just in a nutshell, because I think many people don't really understand what GSG Impact is, perhaps, but we are a network organization. Our mission is really to build impact economies across the globe. How do you put into place the systems that allow investors and governments and businesses to have positive social environmental impact decisions? So it's really all about building national partners across the globe. And we now have, as I think Dennis mentioned in the opening, we have we have national partners in 48 countries. So we really, and more than half of our national partners are now in developing markets, emerging markets. And so we do have a good pulse, I think, on what's happening on the ground. And, for decades, aid was considered sort of a way to have your global footprint. It was something that we were very proud of in the United States, certainly in the United States government under the Biden administration. It was seen as a way to enable global stability, and today it's really all about, aid is sort of seen as discretionary spending. So the change in the last 10 months, the decimation of aid has been felt throughout, certainly our community, but certainly throughout the globe. And the shift in political priorities, I've been trying to think, where did the left and the right come together when this narrative is so polarized? And there's genuinely a concern that crosses the political divide, and I think Amit was getting to this, that people want value for money. People want to know that there's government efficiency. People want to have positive outcomes. So it's no surprise to me that the impact investing market has not dropped off the map like global aid. We see in our markets across the globe impact investing only increasing, and this is particularly true in Asia, where the momentum is quite strong. But I think given where we are and given the impact on communities, which can be felt very dramatically in terms of public health systems are backing off. You see things that were really enabling impact investing in the past, training programs, social enterprise, accelerators. These things have all been pulled back. So, but despite sort of the tragedy of this moment, it also offers some possibility. And I think we really need to use the tools of public finance to unlock domestic and private capital in the markets across the globe. And this is something that we're hearing about Japanese pension, but this is something that it means more pension reform. In our national partner network, our Dutch national partner really drove sort of pension reform throughout the Netherlands. And that inspiration has been translating to Africa, where we are now working to support investment vehicles that are anchored to domestic pensions in Ghana and in Nigeria. So the importance of enabling public finance to put it to work for impact and to unlock domestic sources of capital is perhaps a positive twist on what we're experiencing today. I think it's shining a light on the need for domestic solutions. I think it's shining a light on the need for local, strong leadership in impact organizations.
Can you just give, you started to there, which I think is interesting. Can you give us a flavor of some of the regional developments around the world? Even folks that read ImpactAlpha, I don't think we cover enough extensively in a lot of these markets. Can you just give a flavor where you're seeing activity and energy in the market?
Sure. In Africa, we see a strong push for domestic capital mobilization vehicles. And I mentioned Ghana, Nigeria, but we also have a new interesting vehicle emerging quite nicely now in Zambia. There's also been a push, which I find very helpful, for regional organization in Africa. So our national partners in South Africa, and Kenya, and Ghana, Nigeria, Zambia, and Burkina Faso, there are others, are coming together in the Africa Impact Investing Group to advocate as an Africa network organization in support of helping unlock impact and impact economies. In Asia, we see a lot of innovation on the policy side, sort of unlocking, again, domestic pensions. We see a lot of focus very helpfully on transparency, where I think sustainability disclosure and sort of the practice of companies and investors is quite strong on the front of investors want to have confidence that their investments are having the impact, and so we've seen a big push for sustainability disclosure in Asia. In Latin America, I see there's a strong civil society-led ecosystem. It's less on the supply of capital and much more putting into place our national partners sort of incentives to unlock and accelerate social enterprises and build pipelines. We're also seeing on the public development bank side in Latin America, they're integrating a lot of the mandates that you see around measuring, managing, reporting, and disclosing on impact. And then again, there's collective regional coordination in Latin America, and now coming together on market sizing, actually. And then in Europe has mature policy environments. GSG Impact was created in 2013 when after the UK held the presidency of the G8 and the G7 countries put into place social impact task forces. So there's a strong sort of history of policy environment in Europe and mobilization of capital, particularly the case of the Netherlands, where 10% of assets under management in Dutch institutional investors is being put to work for impact. And then the UK also has, and this is interesting because if you look in geopolitics, the UK and the Netherlands have very Netherlands first sort of, governments that should not be friendly towards this impact economy conversation necessarily, yet we have some of the strongest policy innovations coming out of the United Kingdom and the Netherlands. In the United Kingdom, they've launched in July the Better Futures Fund, which is an outcome-based vehicle that has initially 500 million pounds, but will soon be £1 billion. And this is a government outcomes fund that's very focused on vulnerable children. So you're seeing kind of the most innovative policy coming from the most perhaps conservative kind of governments because there is that value proposition.
That's really interesting. And then you mentioned some policy, some of the vehicles that have been created. For folks that are building the ecosystems in their own countries and regions, what are some of the best practices or signs or key things that these regions are working on to be successful?
Yeah, Yeah, I mean, for us, what's essential to launch a GSG Impact National Partner, which is a local impact investing organization, the key for us is really strong leadership. The national partner needs to be very representative of the local ecosystem. So the supply of capital, the demand for that capital, market builders, intermediaries, and certainly policymakers. So having that constellation put in place is what allows us to move forward. If the governance is there, we can move forward with approval and then accreditation by our board of a national partner. But for me, the national partners, as we, GSG Impact, we're the network organization that oversees and helps to create and helps to accredit and helps to support this network. But what we see is that the window on innovation and the opportunity to understand across 48 geographies what the impact conversation is quite a luxury. And I think our job is to really make sure that we're cross-fertilizing these, so we're showing what good looks like across our network. But anyway, I'm not sure if I answered your question exactly.
Yeah, that's great. That's great. And you have more work coming out on that too, right? What good looks like.
Yeah.
I want to bring in Ellen. Like I mentioned, new in the role, drinking out of the fire hose, I'd imagine. But can you just start with a brief update on Village Capital itself? We were talking earlier. This is an organization I feel like in this industry many of us grew up with. Certainly one of my big inspirations early on. Can you just lay out how the model sort of evolved over time and how it exists today and your reach?
Yeah, with pleasure, and thank you all for having me. It's a great honor to be up here 2 months into this role. And I would say that, Village Capital is an organization that many grew up with. That's a tremendous honor to steward this organization. It really began with an idea in 2009. That was a hypothesis that entrepreneurs in community can actually potentially make better investment decisions than the investors in Silicon Valley in their ivory tower. And we proved that correct. And we also had to innovate around curriculum and support and systems. So today we are both an accelerator programmer as well as an impact investment manager. And that dual hybrid nature of Village Capital has been in our DNA since the beginning. Our Fund 1 is vintage 2014. And we're beating the benchmark. And all 90 investments of that fund were made using our peer due diligence model, which is going into communities, building accelerator programs, working with entrepreneurs, helping them to think like investors, and then running the due diligence process through that community engagement. And so when I was looking at Village Capital from the outside, I was like, this is genius. Like, why is nobody else doing this? And I think one of the issues I was tackling in prior roles, and just to explain how I come to this, I was on traditional finance at JP Morgan and asset management. I then went all the way to the extreme impact side, working at a humanitarian NGO, building out an innovative finance practice and strategy there. And my goal was always to unlock where I came from, capital where I came from, talent, knowledge where I came from, to people most in need. Because it's been set up here before, but it bears repeating. People don't want handouts. People don't want aid. People don't want to be reliant on external forces. They want economic mobility. They want to be able to generate revenue from their small businesses. They want to determine their futures. And yet, the way that the systems have been set up at both extremes are really not designed to change and to think about communities first. It's always been top down. And so it's with great pleasure that I sit in this role and I get to really look under the hood of 16 years of a track record, 16 years of putting entrepreneurs first, putting communities first, thinking about what needs are, and then building products outwards from that. And super proud that we're innovating now on actual financial structuring, fund structuring, thinking about meeting founders and small businesses where they are from an investment or finance need, instead of telling them what they need. We all know that venture capital does not work for most people, and yet that is the tool that has been given to us to solve the world's greatest problems, and it's not solving them. And so we're trying to both push back on LPs to create a better supply of this kind of capital looking to meet entrepreneurs where they are. And that's a de-risking mechanism. When we speak about risk and misperception of market risk, part of why you have issues in investing in emerging markets is because you're bringing tools that are not designed for those markets. And so this is a lot of the work that we're doing. I was very proud to start working with the team and realize that they're already exploring ways to activate our ecosystems of accelerators and incubators that we've been working with for nearly 2 decades, bringing them into the investment making decision process, thinking about what it takes to actually build thriving communities using innovative fund structures and innovative financing. So I would say it's an incredible pleasure to take ownership of that track record. But I think that there's a lot of work to be done in this moment of continuing to do the work and bringing others along with us, because it's a moment to put our heads down and work and not really listen to a lot of the noise.
Often in these conversations of global finance, we lose the perspective of the entrepreneurs and the actual solutions they're building. When I was doing my research on Ellen, I found an interview she was doing on CNBC, so bringing the entrepreneur perspective to mainstream finance. Can you just give us some examples from your network of what your entrepreneurs are achieving?
Yeah, I mean, this has been the coolest part of the job, just to meet folks who have gone through our programs, who have either received investment from Village Capital directly, through partners of Village Capital, or gone through the accelerator training programs. These are some of the best and brightest, literally all over the world. We work in LATAM, the US, Africa, MENA, and Europe. And we've been running these accelerator programs since the beginning, as I said. But I had the pleasure of starting my let's say, world tour, listening tour in Nairobi, where we were hosting a Green Tech Africa Summit. And there were going through this sort of standard cohort progression, and there was one day that was dedicated to bringing in VilCap alum to give advice to this new cohort of who happened to all be hard tech founders, African hard tech founders, bringing onshore manufacturing to Africa, focused on climate solutions that were homegrown, like the best energy and the best enthusiasm. And then you had our alum, 2 companies. One is Rhea Soil, run by Priscilla Wakanera. This is a data-driven soil company that helps smallholder farmers better produce yields from their farming. And then James Odede, who is the founder of AquaRec, and that's a fish farming company in Kenya. And I just watched them give literally the best investment advice I've ever heard in my life. And I've been inside some really, fancy halls of investment, having been at JP Morgan. And it was just holding the hands of these guys, being like, this is how you deal with investors. This is how you create your cap table. This is what people mean by saying this. Focus on growing your business, focus on explaining the risk, et cetera. And so last night I met the folks from New Majority Capital. They're also VilCap alum, and that's super exciting to hear about their experience. There's some people who are here who are presenting, Tierra de Monte, which is a Mexican company, also regenerative soil tech. And then one of our favorite US examples is Kuli Kuli, which is a superfood producer, Moringa, which is a climate-resilient food, and they own now half of the U.S. market share for this product. So, sector agnostic, region agnostic, incredible alum all over the world, and I think that's one of my goals is to make sure that these ecosystems are really activated in the coming years.
And then you mentioned that investors often come into these markets with the wrong type of capital or the wrong products for these entrepreneurs. Is that still the case? Are you still seeing the market not meet the capital needs of these types of entrepreneurs? And I think where are you seeing progress, if so?
I will take the bearish approach to this. We need more capital that is willing to go out of the 10 and to willing to go out of the concept of growth of that venture capital sort of inherently demands. because that's not every business, and that's not what every market needs. And at the same time, everybody talks about the importance of small businesses. We love small businesses, but small business has a really hard time getting access to finance, even in the US. And so there's a bit of like, now starting to just walk the talk and build the products, and I'm very excited to say we're working on some of that. But there's other folks that have been activated in the ecosystem. There's the Innovative Finance Initiative led by Ani Patent Power that I'm sure you're familiar with, that is also trying to bring together LPs as well as the operators to help people understand that we need to move more capital in the direction that meets founders where they are. So I would say we're still not there yet, but at least it is a conversation topic, because maybe 5 years ago you weren't even able to bring this up. It was like venture or bust.
Okay, thank you. And let's broaden it out to the group now. We've heard sort of examples of where we're seeing progress. In this current moment of the sort of calamities we've mentioned, the practice of impact investing, what do you all believe it brings, that it offers to broader global markets on the one hand, or to pensioners on the other? Things like risk analysis, new ways to look at opportunity. What are the elements of impact investing that can be deployed in this moment?
I'm happy to start. Well, I think it's worth acknowledging something we probably all take for granted right now, which is the fundamental kind of notion of impact investing, which is you're investing to accomplish something beyond just making more money for the investors, is both kind of common sense to all of us, but is inherently kind of a radical concept. And when you think about the ways that finance has evolved traditionally, but when you think about what we actually, at a very high level of like, what is the point of investment markets? Like what are markets like designed to serve? What's the bigger goal? And if you think it's to serve like a healthy society that's living in a sustainable way, and that it's actually to create opportunity for people, like these are things that are very relevant in this moment. Right? We've seen a whole sweep of like change elections all around the world, and these are really representing people who are dissatisfied with the status quo. And why they're dissatisfied are kind of the needs for common kind of, kind of basic kind of elements of human dignity. People want housing, they want clean air, they want jobs, they want healthcare, they want to be able to like, have a sense of a future that's better than the past. And impact investing is inherently designed on delivering those outcomes. So I think, to get very tactical, because I think you were talking about like much more granular practices, I think a focus on delivering outcomes is incredibly relevant now, and that's why you're seeing resilience in this market in this moment. I think being able to have more holistic thinking and to understand performance in a multifaceted way, and the discipline that's evolved in the sector around that, I think, is also incredibly powerful. The idea of what I think impact investing is inherently about, which is around solving a problem. Right, whether it's some of the examples that Ellen just gave around, whether it's like regenerative soil and kind of soil tech that to allow for regenerative farming, or it's helping to create kind of housing in communities that have not been reached. And in terms of what society needs, Dennis, that skills that we have, it is really around extending the reach of markets into places that they haven't historically gone. Right, so how do people who've been left out of the financial structure, left out of prosperity, actually get access to financing, but more inherently that communities who have unmet needs have those needs met, that we actually solve problems that have been bothering all of us, and that and we're actually doing so in a way that's sustainable. These to me are all kind of inherent practices in impact investing that the world can learn a lot from.
Excellent. Elizabeth?
Thank you. It's nice to go after Amit. No, I think we've been seeing that there's some definite shifts that need to happen to be responsive to the moment we're living in. And it's how do you make impact policy kind of core economic policy? So we have good examples from the Netherlands in terms of how can you invest your local savings into impact. And today in the Netherlands, more than $75 billion is invested into impact, or assets under management for impact, which is more than all of Europe's ODA together. So we know what good looks like in terms of how do you change the framing, how do you enable domestic capital to be unlocked and put to work for impact? How do you have more outcome-based financing, which is resonating today because you really want to pay for success when you have tight fiscal situations? But then there's also the need, and we're seeing this helpfully, that you need strong local leadership to originate vehicles on the ground and pipelines that are illustrative to the markets where they're working. Having spent most of my career in development finance, we would bring capital into a country and we would bring investment managers, fund managers into a country. And I think increasingly today, the importance of backing local intermediaries and helping to originate domestic pipelines is so important. And then I feel like we're not letting up on the conversation around impact transparency. Investors want to know, they want to have that confidence, they want to know that that they are actually having a measurable impact. And so doubling down on transparency is kind of the third area that I think is so essential to really enable, impact economies to be economic economies, to have that one and the same.
And Ellen, you mentioned the sort of peer-led investment that fellow entrepreneurs may be better at picking winners, for example. What are other practices that you see that could be helpful in the moment?
Well, I think the underlying factor of why peer-to-peer due diligence actually can beat traditional investment is because it removes a lot of bias in decision making. And we all learned a lot over the past 10 years about what implicit bias can do and how diverse teams actually make better decisions and make better investments and have better track records because you're not prone to groupthink in an investment committee or a boardroom. So I think, and yet that has still not caught on. That is not the traditional way of working, and there's been pushback on that. So I guess to be additive to my colleagues here, I think we need to shift the messaging a bit from impact first to actually talk about the economic outcomes that we have generated and the better outcomes and the value that we've added to communities all over the world because we've taken other consequences into consideration in the investment process. Whether we like it or not, we're heading for a world that is very dangerous from a climate change perspective. And traditional finance is still not taking that into account in investment decision. Most impact investing is centering climate because climate actually drives everything for communities all over the world. And so I think there's a moment where we have to push back on a lot of the demand for, show us the impact, how many people did you reach, et cetera, because the reality is that traditional finance has created a lot of problems that impact investing and philanthropy are trying to solve. So I think there's a piece of us that is a messaging component of really focusing on the long-term economic outcomes and resilience that has been built into communities because of impact investing, because you're taking into account more than just profits or returns, and kind of generate more consensus around that way of moving forward. Because in 20 years, we're not going to be able to only think about profits. That is just the reality. And nobody is really understanding that. And yet, if you go inside an investment bank today, they won't deny that climate change is real. They just don't know how to address it from a capital markets perspective. And so some of it is having those conversations, being very realistic, and saying, this is how we've done it. How do we scale this together? So I think there's a bit of a moment for impact investing, as everyone's been saying, we have not lost our steps because there is a focus on returns, but I think we need to be more confident in pushing back on folks that are demanding us to jump through hoops to meet traditional finance requirements when we know traditional finance is actually not solving outcomes for people.
We're going to open it up for questions in about 5 minutes. I have questions. Note them. Is there note cards that folks are passing around? How do they submit the questions? But we'll come back to that. Amit, you mentioned the sort of institutional push into impact investing. You can imagine then the sort of demands from those investors on fund managers and down through the system. How do you, GIIN talks about scaling with integrity. How do you maintain that balance as the practice becomes more mainstream? With sort of the needs of the entrepreneurs at the ground level too. How do you scale with integrity? and I'd like to hear from the others as well.
start with me? Yeah, sure. Okay. So, well, I'll tell a little bit about kind of why I think scaling for integrity is important, because I think we went through a really important kind of like kind of pivot in the way we thought about our strategy for kind of helping to develop the market. There was this early on, like for SOCAP, the early membership of the GIIN, it was a lot of kind of a small community of very committed people who had been working kind of against the current for a long time. And the hope had always been like we need to get more capital. Kind of what Ellen was just saying, like how do we actually get more capital to these issues, and how do we? And then it started to come, and there started to be larger institutions that are more mainstream kind of institutions started to come into the market, and we saw the market actually. Our community, our membership, like splitting across two dimensions. One was, there's about, one camp was, this is the ultimate success. Like the mainstream capital is paying attention to us, they're starting to care about impact, we've arrived, this is what we always dreamed of, it's actually happening. The other camp was like, this is the beginning of the end, that they're going to come and ruin everything, that they're going to water it down, and it's actually going to be like, this is, pretty soon everything's going to get diluted, and then you think about like the issues we're actually like why we're all here together and what we're trying to address. Like we're trying to create more economic opportunity for communities that have been left behind. We're trying to address climate change. We're trying to address these issues that require a lot more resources. So the question for us wasn't like, to scale or not to scale. It was actually like, can we actually have the ambition of defining the terms upon which we think about that scale? And we're a small nonprofit where we don't have any formal power over people, but we started to do a lot of work on actually helping to shape the terms of what good impact investing looks like, which there will be every room in this event will be debating different aspects of this. But can we actually say like, if you want to call yourself an impact investor, these are the types of things you need to do. And it's, and so we started to come out with more guidelines and core characteristics, and we kind of started publishing more. And then we took over as the host of the impact principles that were hosted by the IFC. And what we're starting to see now, which I think is quite interesting around like scaling with integrity, is that we have now seen regulators become much more involved in defining impact investing in certain markets. And so both in the UK and in Japan, which are two major financial markets, they've both come out with guidelines for from their financial regulators, so like the equivalent of the SEC, if you will, in the US. But we think it is important to have an eye towards scale, but the question is like, what kind of scale do you want, and how do we as a community help shape what good looks like? And there's lots of different ways to do this well, and I think it's okay to have a diversity of approaches. But having this fundamental focus on delivering positive outcomes, I think is essential. And having impact to be part of your investment strategy and how you define success in a very intentional way is also some of the core characteristics that we think are critical to embedding integrity into the market.
And we're coming at this, I think, this year more than ever before from a top-down, from a policy outlook, and sort of from the framing that, without incentives, investors perceive that there's just too much risk. And without disclosure standards and sort of impact transparency, investors feel like they just don't have confidence. And then without reform of pension regulation, dormant asset laws, just public policy finance, it's very hard to unlock impact capital, it's domestic capital, and put it to work for impact. So we've been working, just launching a new impact economy index. How do we really shine a light on what does good look like? We know that a single regulatory fix can unlock billions in impact capital. So this is sort of a new project that we're just putting into place to build that impact economy index, which really would be a benchmark for governments that would help measure and rank and shine a light on what good impact policy looks like. Hopefully to have a bit of a race to the top and to be able to sort of emulate across the globe what good impact policy is.
Can I just really quickly answer that as well? So just to put a little bit of reframing around that, scale, impact at scale, when we think about the total amount of impact assets under management, it's about $1 trillion. Total assets under management in capital markets is about $100 trillion. This is a huge gap. And this is not a money problem. This is not more funds problem. This is a systems change problem. This is reimagining what scale looks like. This is reimagining what wealth looks like. and taking into consideration in that reimagination, what are the things that really matter to people? Because we know there are economic studies that show there's an exit off of when people earn a certain amount of money. It's around like 2,000 euros a month in Europe. Their happiness trails off. Money does not buy happiness, and we are not including human happiness in our GDP equations. We are not including cleanliness of water or our ecosystems or resources in our equations in growth right now. So we need to reconsider and reimagine what growth looks like, and that starts from the impact investing community, because the impact investing community has been considering these other factors. So I just add this idea of like growth, reimagining the future. It starts with us, and we have to start doing it now.
I think it's a good segue to this. One of the questions here, which is we talked about the growth of impact investing from a financial perspective and assets under management. We've had some good anecdotes of actual impact, but what do we know about the sort of broad, the scale of the impact of the industry? How are folks measuring impact, and are we doing it at an industry level or sector level? Maybe on the benchmarks could be interesting.
Sure. Yeah, it's happy to share. So I think it's a great question. I think this is one thing that I've always been trying to think about is how do you actually understand progress at a systems level, which is a lot of smart people are working on it, but I don't know that we have the best ways of doing it. So a couple of levels in which we think about kind of progress and how to measure it. So we do a lot of work through, we can support a system called IRIS Plus that's been around since the GIIN's been around. Which is a measurement system. It's used by tens of thousands of people around the world, but is really focused on organized by theme or sector. So there's metrics for example, for oceans, for marine ecosystems and conservation. There's metrics for housing, for quality jobs, and so on. And those each have a basket of measures that around which investors can measure their impact, or companies can measure their impact. So one version you can actually aggregate that, and we introduced a new methodology of aggregating it, and then we recently introduced a methodology of actually developing how do you benchmark performance. But the way we've thought about it historically is to look at two dimensions. One is the way you typically think about benchmarking, which is relative to peers. I'm creating, or I'm reaching, 10,000 entrepreneurs with access to capital, and this other fund's reaching 9,000. Which is good just because people don't actually know how the market context of how people are performing and what good looks like at that type of level. But I think one of the things that's really, we've also been encouraging people to do is to think about the impact of a project or of a fund relative to the scale of the problem. So in the work that we've done through our Impact Lab, we've also developed a methodology called Compass, which is it's freely available. You can check it out on our website, but it actually allows investors to compare their performance relative to the problem at a systems level. We use the SDGs as a reference point, so you can actually look at the scale. Like the number of the reach or something along those lines. You can also look at the pace of change. Right, so if you're reaching 8% more kind of small businesses with financing than last year, is that on pace to actually close the gap or maintain it at a global level? Now, of course, no single investor is big enough to actually take responsibility for the whole system, but I think it at least gives people a sense of context about what is meaningful impact and what's moving the needle, even if your resources are small or if you're at a greater scale. But those are some of the tools we've started to develop that I think have been really useful to investors to kind of understand the context of their performance.
Mm-hmm. One thing we haven't really touched on when we talk about the future of global finance is talent. We talked a bit about entrepreneurs. There's a specific question about how graduate students can transition into impact investing, but where are we seeing opportunities for talent to shift into the space, or maybe even drawing from your own experiences? Can be nice.
I can start because I started my career in 2009 in Egypt, actually. I was working in the entrepreneur ecosystem there on what was an Obama State Department project called the Global Entrepreneurship Program, so a soft power initiative to focus on building out entrepreneurship ecosystems all over the world. And we did a really cool business case competition with Egyptian entrepreneurs on January 20th, 2011. So 5 days later, Tahrir began. And for me, the thesis played out that the future is impact investing, because we were getting messages from these entrepreneurs being like, I'm not going back to work until I finish my work here in Tahrir. It's exactly aligned with what I'm trying to do, building a better world, for a better vision for Egypt. And it starts in Tahrir, demanding the social outcomes that we deserve as Egyptians. And that was it for me. But at the time, Village Capital was just getting started. GIIN was just getting started. Like, there wasn't really a space to do all of this. And so I took the advice to go back and to go into traditional finance, to go into banking. And that was really critical for me, because there's network barriers that can be overcome by starting in that traditional field. And I think also there's some work for us to be done on the impact side, going into the big banks, because we all know that these kids are not happy, and we all know that these kids really care about climate change. I walked through JP Morgan's doors at HQ in Manhattan, past climate protesters, more times than I could count, and the bank was saying nothing about climate change. This is 2018. This is not, climate change was a real thing. And so that the new generation coming through, there is no question for them about this value set and a livable world that they want to be a part of. And so I think there's some work to be done for us to bring more folks over and create those opportunities. I think it was ImpactAlpha that published a report that people, or it was Harvard that published a report that people are not really moving in as much as needed from traditional finance. So I think that's an opportunity for us to work on. And I would say in this role of Village Capital, the people that I still lean on are my JP Morgan colleagues, my ex-colleagues who are not at JP Morgan anymore. Some of them are, but they're the ones like proofing, like, does this pitch make sense? Are you going to get investment? Yes, no. Like, this is what I hear when you talk about soil regenerative products. Like, I don't hear returns. Like, I don't hear income, and you have to talk about it in a different way. So I think there's more work to be done, and you know, my career as an example of that is something I'm very proud of. But yeah, there's an opportunity to take advantage of in the upcoming generations to bring more of that over.
Yeah, and I can only second what I'm hearing, that across the globe where we're working, the traditional way of looking, at assets under management or quarterly performance is definitely not what's resonating. There's a sense that there needs to be a groundswell from the bottom up, but there needs to be an incentive, there needs to be a policy top down to really understand how do we unlock the potential of impact capital. And I think until we sort of have this benchmark that helps us to measure, to manage, and to rank, and to really shine a light on what we need to do in terms of unlocking your domestic capital, enabling your social entrepreneurs, supporting transparency so that we actually know how to measure and to manage and to report from a government level, but also from a bottom up, from a fund level. I think getting this into place can be sort of the game changer to help motivate and move this industry more rapidly.
Yeah, I really appreciate the question. I think one of the reasons we were set up as a network initially was actually to help facilitate like collective learning. There are people in pockets all over the world doing really interesting things, and how do we actually learn from each other? As the market has evolved, I think this continues to be, we need a lot, we have a lot of great talent in the community. We need a lot more if we're going to meet our objectives. And the good thing is a lot of people are interested. So I think there's a lot of demand, certainly at the kind of the grad school level and below. We've also we've introduced a training program that we've delivered in I think 9 times now in different parts of the world. So typically in Europe, in the U.S., and Asia. That one of our foundation partners funded us to develop this, essentially to help investors develop some skills around how do you integrate impact in the investment management process. That's been really well received, including by people who've been around for a while, who actually just wanted to kind of like shore up kind of like certain components. But I think this focus on learning is really critical, and it's a people-powered movement. It's a people-powered network at the GIIN. It's all about kind of community, and I think thinking about how we can collectively kind of upskill ourselves is really important for us to meet our ambitions.
Okay, we have to wrap, but I want to give each of you 30 seconds to a minute on sort of recommendations here at SOCAP on upcoming tracks our upcoming panels on this track, or just takeaways you'd hope people would have over the next 2 days?
Well, Elizabeth, you're on a Financing Innovation Across Borders
Yes,
panel.
I'm excited about that. That's the one I'm most excited
So
about.
highlight the fellow colleague up here. Follow her on that. And then I think funding. Having worked and lived in Africa for a long time, there's a panel on funding future investing in Africa's transformation that I'm really excited about. So yeah, looking forward to more, and also the side conversations that happen here that are so powerful. People tell you what they're actually thinking and what they're actually working on, and we need more of that right now. So.
Yeah, there's, in addition to financing impact across borders, which I'm very interested in, there's a session that's how global finance can shape more inclusive futures, and I think that speaks to some of the questions we're hearing today. But I don't know, I hope you come away from this track sort of thinking how, what can you do to enable local leadership to drive impact in your marketplaces, because it's so important that we have sort of not only the top-down policy, what good looks like, but the bottom-up, sort of enthusiasm around this conversation. And I think SOCAP represents that so nicely. And this track has a lot of, between investing in Africa, investing across markets, there's a lot to unpack that.
Yeah, I think I just start with some advice that came back to how Dennis opened this session. This is a time where the world needs a lot of leadership, from all of us in every way that we can provide it. And I think it is, as you think about taking advantage of this wonderful event and this all these great people who are kind of putting their perspective on display for these sessions, I would just think about which things give you inspiration, to help you to think differently and think in kind of bigger, bolder ways, and think about kind of different perspectives. And those which really help your learning, because I think that this combination of skills and inspiration, I think, are really critical. Because in this space, of course, we're all trying to figure out how to do this better. When I spend a lot of time talking about impact investing outside of the impact investing community, and the rest of the world is looking to this community as a bright spot in the world, and looking to us for leadership. So I think just taking advantage of this wonderful event with that in mind, I think will hopefully give us all a little bit of a boost and a little bit of new ways in which we can help support positive progress towards a much better future for finance.